This, in my view, is one of the biggest breakthroughs ever for government employees thinking about retiring or resigning. Now, if you are standing at that crossroads, wondering which path is better, retirement or resignation, you are not alone. It's one of the most important and difficult decisions you'll ever have to make. But here's the real issue: both options come with benefits and serious pitfalls. You see, if you had to retire, the pension fund handles the investing for you. And on the surface, it feels safe, but you give up control. You don't get to choose where your money goes, and you cannot see the fees. And when you pass away, your spouse might only benefit from half of that income, while your children could walk away with nothing. If you had to resign, you take back full control. You decide where to invest. Your family could inherit everything. But what if the markets crash? What if the fees are too high? And what if you lose money like so many other members in the past? Now, it starts to feel like no matter which route you take, you're forced to give up something important. But what if it doesn't have to be this way? See, what if there was a way for you to combine the peace of mind that retirement offers together with the flexibility and full control of resignation? What if you could invest your money in a solution designed exclusively for government employees? One that truly understands what you're going through and that addresses the fears and concerns that you have. It's a solution that protects your money with built in guarantee so that you never have to live in fear of losing. One that is simple and easy to understand, that doesn't need a lot of management from you, and is not confusing with complicated investment jargon. Now, it's a solution that's designed to protect both you and your family's future so you can have real peace of mind. And in today's video, I'm going to be introducing to you what I believe is the ultimate investment solution for government employees. Because for the first time ever, you now have an investment that is designed exclusively for you, not for the private sector. You no longer have to be forced in a choice between control and security. Now, make sure that you stay with me until the end because I'm going to be sharing with you 5 powerful secrets in the beginning, plus a bonus secret tip that I'll share with you towards the end. And it's designed to help you avoid one of the biggest mistakes that government employees have been making when it comes to their finance. Now, as a disclaimer, the first thing that I want to talk to you about here is remember, whenever doing any type of investing, the investing needs to happen with one of the large investment houses, right? And usually I don't mention out the names inside of the videos because I believe that it's important for the entire solution to be molded around you and not the investment houses. However, in today's video, I'm going to be guiding you into how to read something called fund fact sheets, and we will mention some of the popular names, right? So when you are investing, make sure that it's with one of the reputable institutions, meaning you would not invest directly into my bank account, let's say. Although it would be great, but it's not allowed because you cannot transfer the money into my account. It's not an approved fund, or into another financial advisor's bank account because it's not an approved fund. The pension fund actually protects you from that happening. But you want to use someone large and make certain that you get that information checked in advance, right? Which is what I'm going to walk you through in today's video as well. So I've done a comparison for you here, and I know one of the things that you are going to remember from all my videos is my beautiful handwriting. So you'll see we have the traditional way of investing and we have the new way of investing. The new way of investing is basically a solution that I've been working with for around 15 plus years, chatting with the investment houses and getting them to understand the significance of government employees, right? I believe that as a government employee, you're faced with difficult decisions that the private sector don't have to make, things like approve fund. And as such, as an investment solution must be created exclusively for you, which is what we're going to talk about when I go through the new strategy that is available. And what's happened since then is the investment houses have finally agreed to create a solution that is exclusively for government employees. And I'm now going to be doing a comparison between the traditional investment, which means what was there in the open market or what is still there, versus the new strategy, right? The one that's now been created exclusively for government employees. Let's start by having a look at the first difference. The first difference is in a traditional plan, it is created for anyone, meaning it's created for government employees, but it's also created for the private sector. Now we have to keep in mind in the private sector, it's actually comprising of bulk of South Africans, right? This is, a fraction of South Africans that are working within the government employee space, and therefore a fraction that would have that specific need. Majority of South Africans are not working for government, and therefore they don't really have the needs that you would have. So let's take a look, right? The first benefit I believe critically important is it needs to be exclusive. Here's the reason why. You currently have your fund sitting here with the pension fund. I'll just label it as PF, as the pension fund. And ideally, you want to have your funds transferred over into what is called an approved fund. So we'll move it out here, right? Remember, you've got two options. The first option is you can draw out all your funds in cash, which, if you've been watching my videos, please, not the ideal route, because you're going to pay a significant amount in tax, right? The next route is you can have your money transferred into an approved fund. Now, there are different types of approved funds, as I discussed in previous videos. We're not going to get into that detail now. But when you invest money in the approved fund, it's got to go into some type of fund. So the reason why I was talking about this being exclusively for government employees, if you have to think about the private sector, they don't even know about approved funds. They don't even know that such a thing exists, because in their case, the process is a lot more simple and straightforward. They can exit out of the fund, they gain access to the one third. They don't have the issue of calculating the true one third. They're able to invest and earn an income. It's pretty straightforward. Whereas in your case, it's a bit more complicated. You've got the option of choosing retiring or resigning. And if you are aiming at resigning to gain full control, you've got the option of either taking this in cash or moving to an approved fund. Now, when you have money inside the approved fund, it means you now have a step that is not there in the private sector. Therefore, I believe it's critically important for you to have something exclusively for you, right? Exclusively for government employees. So that's the first thing, is you now have a solution, the new solution. It is exclusive for government employees, pardon me. And I believe this one's critical because it's now, and as you see as I go through the video, and keep in mind today's video is going to be a little longer than the other videos because I'm going to be walking you in detail some of the elements we've been looking into. It's 15 years of research. It's not going to be a 15-year long video, but I do want to give you enough meat behind this so that you avoid making the mistakes and you understand exactly what to look for when you get into your investing. So it needs to say that it's exclusively for government employees. And if it does not say that, then it's not really built with you in mind, right? It's not really built ideally with the solution for the approved fund or any of the other elements that we're going to be walking through now. The next thing that we're going to have a look at is the traditional way of investing is unit trust based. It's unit trust based, and as a result, it does not offer any guarantees. Now, again, as I said in the earlier part of the video, I want to walk you through what's called a fund fact sheet. You don't have to know about investing. You don't have to know, the technical things that I know or another financial advisor or planner knows. But I want you to have a little bit of knowledge so that you understand how to read it, so that you do not go into the investment with your eyes closed or just trusting somebody only to realize at a later stage you can lose money, right? Now, how this all started is I'm of the belief, I hated hearing this saying, it's the markets and, you cannot predict the markets. I hate having to hear that saying. I believe that we as financial planners and advisors, we have the power, to invest your money in a better place. We've got hundreds of places to invest money, and we need to craft a solution that's better suited for you. So why should you put your money into a solution and later on find that you've lost some money? Why not do the investment correctly in the beginning so you don't have to worry about losing money from the start? This is how this all came about. And of course, I wasn't able to find something specifically for government employees. Therefore, I approached the investment houses and asked them to create something. Now, why is a guarantee important, right? And how do you know whether a fund is offering you a guarantee or doesn't offer you a guarantee? So here, what I've done for you is I've picked out the most, very popular balanced funds. Balanced funds are not too high risk, not too low risk. Again, there's nothing wrong with the funds. They are amazing, amazing investments, incredibly popular, well-established brands, absolutely brilliant, right? We're going to be going a little deeper, trying to understand some of the fine print. And this is for you to decide, hey, look, is that an investment solution that works well for me? Or is it something that you don't really like? So we're going to be going through here. This is the Alan Gray Balance Fund fact sheet. And one of the key information or key things that I want you to keep in mind is you'll see at the top, it actually has a date on the fund fact sheet. So in this case, 30th of April 2025, which is around the time that we are recording the video. So it's appropriate for the time, right? It's so easy for you to gain access to the latest fund fact sheet. If you don't have the latest one, just do a Google search, Alan Gray Balance Fund fact sheet. It'll come up and it'll give you the latest one, right? Now, again, I'm not saying that, this company is a good company or it's not a good company. I'm guiding you on how we went about identifying what's critical in order for us to make sure that we have a solution that's both for government employees. Now, all of the fund fact sheets have some information that's confusing. We're not going to go into those details, but it also has some information which is very helpful. Like in this case, and Alan Gray words their fund fact sheets also in a very, very nice way. So you notice it says suitable for investors who. And on the second line here, let me see if I can get this to be zoomed in. So you'd notice that it talks about, and I'm highlighting it for you. It says it's suitable for investors who are comfortable with taking some risk of market fluctuations, right? Comfortable with taking some risk of market fluctuations and potential capital loss. Now notice, it's already giving you the information up front, right? So we understand how the markets work. We know it has this type of movement where it has the ebb and flow. And the fund fact sheet, you haven't invested any money as yet. Do you agree? We can read off the fund fact sheet and it is already saying to you, hey, listen, this is suitable for investors who want to have some risk, who want that risk of market fluctuation, who are aware that there would be times of potential capital loss. Now, as a government employee, this is a problem, right? Which I identified very early up. I wasn't very happy with this type of investing. Nothing's wrong with the fund. I'm just talking about the investment side as well in the beginning, because if you are transferring your money into the approved fund, let's say you end up with a market crash, right? Markets drop by 10%. If you don't have a lot of money, it's not going to be significant. So if you have 100 Rand and the markets drop, then you are losing 10 Rand. See, it's not a lot, you agree? But what happens when you have a significant amount of capital? So let's say you have 5 million that's sitting inside here. And markets are unpredictable. We don't know when the markets could crash, right? If you think back to when COVID had transpired, markets dropped around 25% in some cases. So we don't have control over that. Now, a 10% drop on 5 million means you lose 500,000. And that can happen in a flash. Now, if that had to take place, just think about how you would feel. How would you react? And if it happens right in the beginning when you have your money in the approved fund, it's definitely going to affect your 1/3, because now your 1/3 is going to be less because you've had a loss already. It's going to affect your 2/3 because your 2/3 is going to be less. It's even going to affect your P98 tax-free calculation, you see, because the amount of money that you can access is now less than if you didn't have the loss. So therefore, when creating or requesting these solutions with the investment houses, I said to them, hey, look, we need to have something that offers protection for government employees. And in my view, the best way to have that is we need to have some type of guarantee. We need to have some type of guarantee, right? Which means we're now turning the tables around, right? Instead of you taking all the risk, which I don't believe that you should, I think the investment houses should carry the risk. So if they carry the risk, then you sort of know that you're safe, right? So this is why I believe, as point number 2, it needs to include a guarantee, right? And think about it. If you know that your money is safe and secure, if you know that you have a guarantee, wouldn't you feel better about investing? Right? Especially when we're dealing with such a large amount of capital. Now, the third thing that I want to walk you through here is confusing benchmarks. But let's first understand what actually is a benchmark, right? A benchmark is simply a target. It's a target that the investment houses have, and the benchmark could either be related to where they would invest money, and I'm going to use an example for you now. So let's head here into, and each of the companies again would list this in a different way, right? So here I've got Coronation, and we're going to go into some of their details. Again, it's an absolutely brilliant fund, a rich history, amazing performance. Uh, it's done phenomenal things. Let's understand what the benchmark is here. So you'll see the word benchmark. I'm highlighting it for you, and then we get to see here. Let's see if I can highlight this. So it talks about a CISA fund category average, right? So what does it mean? It means inside of that range of funds, right? Let's try and get like a very, very simple understanding for you. Notice this is a balance fund. So it is looking at other balance funds, right? Hey, what's the average that's inside there? Now, the danger with not having clear benchmarks is sometimes the fund might have a benchmark. Let's put this in here. Sometimes the fund might have a benchmark that's linked to some type of category, right? Or it might have a benchmark that it has some type of asset split, right? What I mean by an asset split, it might say, hey, we are going to be putting 50% in South African equities. Just making this up as we go along, we're going to put 25% inside property. And we're going to put 25% inside international, right? Now, when it's doing it like this, the big problem with it is it doesn't give you a clear direction. It doesn't give you a full understanding of what type of return you're going to be getting. Is your money going to be safe? You see, the fund is just showing what their benchmark is, what their category and target is. For me, again, I believe this is a bit confusing. It's difficult for you because you don't really know what's happening, right? A fund, now Coronation's not doing this, but there are many funds that do the asset split and they keep that as the benchmark. But when they do that, let's say the fund doesn't perform well. If the fund is going to deliver a return of, say, 0.1%, right? Now, it might have achieved all of this, but the return is very, very low. You see, the fund itself might be getting awards, it might be recognized because it was able to fulfill these roles. But for you as an investor getting a 0.1% return, that's not good. You agree? So therefore, I believe it needs to be a simple target. And the best target in my view is it must be linked to inflation. And the reason why I like inflation is, and it should be inflation plus. Inflation, easiest way to understand it, just think about the price of bread. Say a few years ago, the price of bread might have been 10 rands. And now the price of bread is 20 rands, right? So what's affecting the price of bread is what we call inflation. And in a few years' time, maybe the time that you're watching this video, the price of bread's gone up above 20 rands, right? Now, we want to beat inflation because then we know that the buying power of your money, you can still afford to buy bread basically, right? Your money is growing, bread is growing at this rate, your money is growing at the same rate, right? That's what it means. If we don't beat inflation, that means the price of bread is going up, but your money is growing at a slower rate. So soon you're not going to be able to afford bread, right? I'm using bread as an easy example for us. So coming back to here, why I like it to be tracking inflation, let's say we're trying to beat inflation by a certain percentage. If inflation is down, right, let's use in my example, say we're beating inflation by 3%. So if inflation sits at 2%, as an example, then we want to beat inflation by 3. So we're getting 2 plus 3, which is 5, right? If inflation goes up and inflation goes to 5%, then we still want to beat inflation by 3, right? So now we would have the target being 5 plus 3. It's now heading up to 8, right? Can you see it's an easy variable. It doesn't have anything to do with the markets or anything like that. The target is clean, it's linked to inflation, and also gives you a chance to do better planning because it's something that you can sort of work with, right? Does it mean that the fund, if they're going to do, if they're saying, hey, it's inflation plus 3, that they will always do inflation plus 3? No. There are times they may do less, times they may be doing more, but we want them to be held accountable to some type of return, right? And of course, we can look at the history because we don't want them to lie to you, right? We don't want them to say to you, hey, look, we're going to do inflation plus 3, and they've never ever done inflation plus 3. They've only done inflation. Then obviously, again, on the fund fact sheet, we can see the history and we can get an idea. And then you know, again, that the fund's showing you something, but it hasn't been able to deliver. So the key thing that I'm showing you in today's video is It's information that you can gain access to upfront. You don't have to be concerned that you've got to invest money first before you do the investing. Uh, And now that we've created a solution exclusively for government employees, it makes the journey, your journey, a lot easier, right? So now it's simple. It is basically targeting inflation plus. Next up is, and yeah, I hope it doesn't come across like I have a lot of issues, but I am on the side of you as a government employee, right? I believe that as government employees, it's you needed to have solutions that were created exclusively for you. And one of the other challenges was a lot of the funds focus on long-term growth, right? Long-term growth. So we'll have a look at it. Again, nothing wrong with the brands. I believe all the brands are phenomenal out there. This is all mutual on the balance fund. So we're looking at just three different balance funds, right? I'm not comparing all different funds. Again, I'm not saying any of the funds are good, not saying any of them are bad. I'm just trying to get you to understand how it is that we went about creating a solution for government employees. That's now specific, right? And if you have to look at All Mutual's balance fund, see, they're showing here from February 1994 up to February 2025. Now, if you have a look at that investment horizon, it's a very, very long investment horizon, you see. So the challenge I have with it is we are emotional human beings. See, in the long term, when you view a graph like this and you see the green line, it makes you want to invest money because you can see, hey, the green line has performed really well. In fact, if you look at this graph, it's performed exceptionally well. It's shot the lights out. It's done amazingly well. Whereas in reality, what happens, and if we have to zoom in here, you would notice that there are some times where the markets dip. And this is why I was saying we are emotional human beings, right? So let's head back to this. We understand now long-term investing. So here we would have time. Over time, we would see this type of effect happening, right? Money is likely to grow. But again, think about a moment where there's some type of loss. Think about it. Your money was sitting here, it then dropped here, right? Let's take an extreme case like COVID, right? You had 5 million that was sitting inside here, and then markets crashed, and now let's say you have 4 million. Now, at that point in time, are you still going to be focused on long-term growth? See? Are you still going to be thinking, hey, you know what? I'm here for the long term. I need to keep my money in there. Or are you going to be thinking, hey, you know what? I had 5 million just a week ago. I've now got 4 million. In the space of a few days, I lost $1 million. What if I could lose more money? I have to come out of the solution. And this, I believe, is one of the biggest issues I've seen for investing with government employees, right? Because inside of your fund, inside of the pension fund, everything has been based on formulas, right? It's based on formulas, it's all calculated accordingly. So in your case, if you have a look at your resignation value in particular, you would notice it's constantly increasing, unless of course there's a formula change, but it's constantly increasing. So time is a factor on your side. You look at it today, it's a certain value. You get your statement. In fact, you can do it. Get a statement at the end of this month, get a statement at the end of next month. You'll see, hey, this resignation value is growing because it's taking the years of service into account. Whereas when we're investing into the market, it's a different picture. You see, you can be exposed to this. And because it's your entire life savings, I've seen this where members, the moment that there's some type of risk, they lose money, they almost immediately want to come out of the investment and move it into another investment. And the moment that you do that, you now start to lose out on the long-term growth. So what's the fix? The fix is simple. Instead of just focusing on long-term growth, we need to focus on both long-term growth, because we want your money to grow, but also short-term safety. Short-term safety. So that way you have sort of a natural progression here. You don't have this effect happening, right? And this is why, again, having something like a guarantee becomes essential, right? You want to be able to invest for the long term plus short term. Because let's face it, If you don't invest over the short term and you're going to be moving your money out, then you definitely will not stay there for the long term. But if you are feeling, hey, you know what, my money is growing in the short term, then you will stay there for the long term and it gets even better. This is why I believe it needs to be a solution that's focused on both long term and short term. And then the next point that I want to walk you through is the costs. Now, of course, I've approached all these investment houses wanting to get a solution that's created specifically for government employees. And naturally, cost is something that would come up because you have to keep in mind the investment houses are all there designed to make a profit as well, right? The challenge is this: inside of the private sector, the pool is quite large. See, there are a number of people who can invest money in the private sector. Inside on the government employee side, the pool is a bit smaller, right? Because there's plus minus 1.2 million members. But not all of them are wanting to retire or resign at the same time. It's a few tens of thousands that leave every single year. The problem is when those individuals start leaving, when those members are leaving, some are naturally leaving because they want to retire, in which case there's no money flowing to the investment houses. Some are leaving because, unfortunately, they've closed their eyes. Some are leaving because they want to take all their money out in cash. And some are leaving because they want to hit this part of resigning and transferring this route to the approved fund. But even there, when money is getting moved to the approved fund, it's still getting split. So if you can imagine, it's like almost like a bloodbath, because it's like all the investment houses want to secure your business, and government employees are investing with various investment houses. There's no one or two investment house that has the lion's share of this. So the problem with that is the investment houses cannot consider this as a very, like a highly profitable model to create something for government employees, right? Until now, because now I've got them to create a solution, again, exclusively for government employees. This is now exclusive, right? Which has those elements that we've been discussing so far in the video. But at the same time, I've gone ahead to ask them to reduce the costs, right? In fact, some of the costs are even taken away in creating the solution. And the reason is I'm now motivating to them that once this solution gets created and more government employees start to understand the solution, that this is not just a solution that was created for anyone, it's a solution created exclusively for government employees. Naturally, more members would want to invest here, right? Because it covers the concerns that you might have, right? Or a lot of members had raised with me that, there's no guarantees. You now have access to a guarantee, right? Where it's confusing, it's now not confusing. Simple benchmarks. It's offering you protection in the short and long term. It's able to provide your income in a safe and secure way. So in this regard, chances are more and more members would want to buy into that solution. And as more members buy into the solution, guess what's going to happen? This pool would start to get bigger and bigger and bigger. And that means we have more bargaining power. We can go back to the investment houses, negotiate on rates, negotiate on special type of investing, because now we have a solution that is, again, created exclusively for government employees. Now, should anything happen, remember, all of your funds must still pay out to your beneficiary or beneficiaries, right? So none of this money belongs to the investment houses. None of this money belongs to me. You're still in control. You get to decide all of those things, right? We're just talking about where the money gets invested, and we want to make sure that it's a place that's secure and safe. I know you've been sticking around to the end because we want to go to that sixth element that I wanted to talk to you about, and this was around the diversification. Right, so I have had some members asking me, hey, look, we don't want to keep all our eggs in one basket, right? And I want to say to you that this cannot really happen in the investment world. Let's go have a look at some of the fun fact sheets so that you can see this again, right? I have the All Mutual one up here, and you would notice inside this section where it's called asset allocation. Now, you don't have to know all of this stuff, but I'm just showing you that even though you might choose this particular fund or another fund, or even say you're going ahead with the solutions that we've created for government employees, it doesn't mean all the eggs are in one basket, because all the investment houses will always run this type of split. See, there's a portion of money that's going into SA equities, a portion of going into international equities, SA bonds, fixed interest, SA property, liquid assets, and that theme runs across the board, right? So even if we have to look at the other investment houses, oopsie. So for example, Coronation, we get to see it here where they list their asset allocation and exposure. And you can see they do not have all the eggs in one basket, right? It's spread across local and international investments. Same on the Alan Gray side. You notice it here. See, the split is big. So the investment houses would never keep all of the funds inside of one place. And you shouldn't be concerned, right? What you should be looking at is, when doing your investing, do you want to have an investment solution that is traditional, where it's anyone can run the investment, it's full exposure, it's unit trust based, there's no guarantees, it has different types of benchmarks, long-term focus only, you don't really get any preferential rates? Or do you want to have something that is exclusively for government employees, keeping your everything that you want in mind, including things like the approved fund that has built-in guarantees, that is linked to inflation, that covers the long and short term, and gives us the ability to start to negotiate the costs with the investment houses. I hope the video has been helpful. It has been a long one. So if it's been beneficial for you, comment below. Give me some feedback, right? What's been the biggest takeaway for you from this video? Is this helpful for you? Now, understanding that it's possible for you to have an investment solution created specifically for you, and the fact that you don't have to sign or invest your money before you make this decision. You see, you get to understand all the information upfront before you make a commitment. So comment below, and if you've not already done so, please, I encourage you to like the video, subscribe to the channel, and also remember to share the video with other government employees, so that as a community, everyone becomes more empowered. I'll see you in the next video.